Welcome back. So now let's discuss search and liability to pay in certain cases. Two very small chapters which we are going to revise together. Now, when it comes to search, the governing provision for carrying out any search is section 67. Section 67 basically has one condition. There should be a reason to believe. That means the officer cannot merely on suspicion conduct a search because it is an uninformed search, meaning the taxpayer would not know that his premise is going to be searched today. So obviously it has lot of implication, and hence he has to have reason to believe that the person has suppressed certain documents, he has suppressed the stock, he has not paid the taxes on time, he has contravened any provisions with an intent to evade tax. Only when these conditions are satisfied, then the search will be considered as a valid search. Otherwise it will be considered as a invalid search. Then see, when search is done, it has to be authorized by a officer not below JC. Joint Commissioner is the officer who is authorized to conduct a search. He will pass a seizure order. Seizure order will be passed for the documents which are there. It would be passed for any other particular instance where, say suppose some goods are being taken away, then in that case seizure order will be passed. Sometimes when it is not practical to take the goods, they will put a lock and keep it in a room, and that will be under the lock of the department. In that case also seizure order will be passed. Now once seizure order is passed, can those goods be released? Yes, there are two ways. One is a provisional release, but please understand, even though the law says provisional release, once a provisional release is done, those goods cannot be seized again. Provisional release can be done if you give a security or you pay the tax interest penalty. Say suppose you pay tax interest penalty, then also this will work. Actual release can happen only if department has a failure. What's the failure on part of the department? Department has not issued notice within 6 months plus 6 months, and if they fail to issue notice within 6 months plus 6 months from the seizure order, then they have to release the goods without any payment being received from the taxpayer. Now once show cause notice is issued, any document which is not relied upon should be returned within 30 days. Sir, can we take the copies of these documents? Yes, obviously it can be done. Plus if it is perishable or hazardous goods, they may also sell those goods. Need to be very careful about one important point. See, in Code of Criminal Procedure, the law says that the goods will be taken to the nearest magistrate, and the seizure order will also be taken to the nearest magistrate to take cognizance of the crime or the documents which have been seized. Here, instead of taking it to the magistrate, all the provisions are replaced by commissioner. It will be taken to the commissioner. Then you have a provision, section 68. What does 68 deal with? Inspection. Inspection is basically without reason to believe. Even a suspicion is sufficient to carry out any inspection. Now inspection is basically carried out for one particular major reason: to check whether the conveyance which is carrying the goods have proper documentation, and for that what is prescribed? E-way bill. So if the value is more than 50,000, the vehicle has to carry a e-way bill as well. If the vehicle is not carrying e-way bill, then in that case inspection would be done, and then 129 penalty will be applicable. Section 70 is another important section where department can issue summon to any person who is connected with that proceedings, or they believe that this person might have some documents or statements which are necessary to conclude these proceedings. If the person fails to appear, then in that case a penalty of 25,000 CGST, 25,000 SGST may apply, plus Code of Civil Procedures, he'll be considered as a person against whom a case can be filed. Then section 71 is access to business premise. The department, while doing departmental audit, or chartered accountant while conducting special audit, have access to business premise. See, please understand, access to business premise is going after telling. Search is going without telling. Which is more harsh? Going without telling is more harsh. Access to business premise is much more easier compared to search. Search is dangerous, where they will not even tell you that they are coming, but access to business premise, it's informed and then the department visits. So these are the important sections with regard to search. Then comes a very small chapter, liability to pay in certain cases. It starts from section 85, ends with 94. Now basically, what was the difficulty because of which government came up with this liability to pay in certain cases? See what happens in certain cases where there is a transfer of business or death of a person, or a minor, or a case of trustee and trust partners of a firm. There used to be a misunderstanding as to who is liable to pay it, the tax dues, and then department used to issue the notices. The other parties used to go to the court, and it used to take a lot of time just to determine who is the person liable to pay. That's why liability to pay in certain cases from section 85 to 94 determines the person liable to pay the dues in certain special cases. So it is clearly defined here. Let's see. Say suppose there is a sale of business. Now up to the date of sale, or up to the date of transfer of business, till this date, who will be liable? Mr. A and Mr. B will be jointly and severally liable, meaning department can recover money from either B or A. That means a person who is a transferee, a person who is purchasing a business, has to do a perfect due diligence. Otherwise, for the crimes which were done by Mr. A, Mr. B will be jointly and severally liable. Very dangerous provision, but that's what the law says. What about after the transfer, sir? After the transfer, B will be solely responsible, not Mr. A, because Mr. A cannot have a check. See, while buying a business, Mr. B can still have a check, but after that, A will not keep checking that what's the crime being done by Mr. B. Then section 86 talks about principal and agent. Principal and agent are also jointly and severally liable. Which agent are we talking about? We're talking about schedule 1 agent who is billing in his own name. So in that case, if agent is billing in his own name, who is responsible? Principal. Principal cannot say that agent has done the crime, please recover it from him, I am not going to pay. That's not allowed. Agent is also liable, principal is also liable. Okay, 87, amalgamation and merger. Basically, if there is an amalgamation or merger, see, sometimes the order will come today that amalgamation or merger is approved from 1st April. So it is approved from a prior date. Then in that case, the question is, what about the transactions between those two companies which are now getting amalgamated between 1st April and today? Whether those transactions will be valid, because tribunal or court has said that both are deemed to be merged from 1st April. So what about that period? It's said that both will be regarded as separate persons up to the date of order. That means till date of order they will be considered as separate persons. Okay. Partnership firm partners will be jointly and severally liable. Is it, sir? Yes. Sir, what about a retiring partner? Will he be liable even after retirement? See, once he retires, if he does not give the letter saying that he has retired, if he does not inform the department regarding his retirement, then in that case he will be jointly and severally liable till the date of retirement. Is it, sir? Yes. So it is the duty of the person to inform that he has retired from the business. Otherwise, the partners are always jointly and severally liable. Liquidation, the liquidator will be informed that these are the dues and these also have to be taken into account while liquidating the company. Public company directors are not jointly and severally liable. No, sir, not jointly and severally liable. Private company directors, if it is found that they were involved in the crime, then these directors will be jointly and severally liable. Okay, what about guardian trustee? See, the law very clearly says that minor will be treated as if he is a major. Incapacitated person will be treated as if he is a capacitated person. That means a lunatic will be considered as if he is not a lunatic. A minor will be considered as if he is not a minor and major. So guardian trustee, they will also be liable, plus recovery can happen from the minor as well. Then we have last two provisions, section 93, 94. 93 is subject to IBC. What is IBC? Insolvency and Bankruptcy Code. It says if there is a death, then same as provided is IBC, the transferee or the legal heir will be jointly and severally liable for any dues arising. He has to clear the dues upon death of the proprietor. Partition of HUF, even after partition of HUF, the members and Karta will be jointly and severally liable. Dissolution of a firm, even if it is dissolved, subject to IBC, the partners will be jointly and severally liable. Section 94 basically talks about cases where maybe the firm is still there or maybe they are not insolvent till now. Then in that case, if there is a discontinuance of business, partnership firm will be liable, thus partners also will be liable. Same goes with AOP, BOI, members will continue to be liable. Even in HUF, members and Karta will be continuing to be liable. So basically it puts the burden on a particular person, saying that the person has to pay the tax dues. Just because it was conducted in the name of partnership firm does not mean you will save yourself. You are jointly and severally liable. Just because the crime was done in the name of private limited company, it doesn't mean the director who was involved completely in that particular business can say that I will not pay the GST dues. It was actually the private limited company who has evaded tax. So it's placing the liability in certain cases on specific persons who are involved in the operations of that particular venture. That's the basic aim of liability to pay in certain cases. Revise this properly, because liability to pay certain cases, institute generally asks a 4-mark theory question. See you in the next video.